Hey guys, welcome out to the presentation or webinar of the 9 Rules of Credit. While we're waiting for a few more people to log in here, I'm just going to quickly go through the flow so that you guys can get as much possible value for your time here with the presentation. So I really like to do this presentation live because I get to see the reaction in people's faces. We have a lot of fun. We play credit ball, which you'll see a clip here in a little bit. We also get people very angry because of they've never heard this information before and they really wish they would have known it a couple weeks ago or years ago. But either way, when it comes to a webinar, some of the difficulties that I've had in the past, I found that having people call in or opening up the mics, you get a lot of feedback, you get a lot of noise, very distracting. Then people will ask questions and it will put me on a rant and I'll go forever. So what we have here is a confidential chat box. This is actually just goes directly to me. Now, my goal is to answer all your questions. However, because of restriction of time, I want to make sure that if I don't answer your question, you definitely follow up with me. All my contact info will be sent out to you and how get a hold of me, plus additional webinars and services and stuff if you do have specific questions. So we'll just jump right into it, and anyone that comes on, well, they can just kind of catch up as they come. I like to start off with letting you guys know exactly why I'm doing this. When I first started to learn about credit and how it all worked, I thought I had missed some class in high school, or I thought I was the only one. But as time went on, I started learning very quickly that it didn't matter if you're new to Canada, been around for years, high net worth, no net worth, just everyone had a whole bunch of misconceptions about credit. They thought they had good credit because they paid their bills on time, but unfortunately, it takes a lot more than that. And when I started seeing all the issues that are wrapped around with credit and meeting with other financial professionals, kind of found out very quickly that there's no one else that really goes and helps clients with credit. My passion and what I think every Canadian should know exactly how credit works, what makes it go up, what makes it go down, how it all fits together, how the banks interact with credit, so that Canadians will stop being victims of credit and take control of that. It's not difficult, but if no one's ever told you the rules of the game and you start playing, then it's very difficult to play that game properly. So my vision, my goal is to help Canadians understand the rules of the game so that you can play the credit game to win. Now, in order for me to get out with my passion and help Canadians understand this, I ask for you guys to help as much as you can as far as passing along. So I have kind of the social media stuff here. If you're into that, great. But even if you don't do social media, you all have friends, family, siblings, whatever the case may be, coworkers, clients, referral partners. They need to know this information as well. So I'll be sending you an email with all the different links and how you can kind of interact. My goal is if there's something that stands out to you as very informative or something that you think would really help you, please pass that along, because there's so many Canadians looking for this information and they're confused on what they're finding on Google or just online, or their bankers telling them something. But people need this information and they're desperately looking, and if you can help them get it out there, pass it along, you're going to save a lot of headaches and problems for them going forward, and they'll be very appreciative, and I'll be appreciative too, because that works into my passion, my vision. So I always get the question, how did you even get started with credit? Make a long story short, it all started with when I was a mortgage broker. It's high volume on the number one funding mortgage team across Canada. And you see a lot of volume by doing that. And a lot of people coming in and they think they have good credit. Oh, I just pay my bills on time. Like I said, there's a lot more to having good credit than that. What I did is started to write the book in order to not look like an idiot. I took hundreds of credit reports that I had access to, checking those out, searching, testing, reviewing everything, and basically coming out with 9 basic rules or categories where people can really improve their credit or take control of their credit. The why or how I got started, it all came from life experience, dealing with the banks and lenders and finding out kind of what they wanted, in addition to the Equifax, TransUnion, the scoring system, and getting it all out in a way that the average Joe would actually be able to understand. You may have been on some webinars in the past and it's very salesy. I'm here for the education, get the message out. However, some people ask about services and products, and so we can just get this over with now, get it done. This is about as salesy as I get. I do have some other products, services that are available They're not for everyone, but if you are looking for something to give to others or gifts, stuff like that, the book works well for that. Or you can just invite them to the webinar that's free anyways. If you have a copy of your credit reports and you're kind of wondering, how the heck do I read this thing? Then there's a webinar for that. And then the last two are one-on-one consultations. These are direct, custom to you, go through, but the first one's basically to review the credit report and give you step-by-step on how to increase your credit as quickly as possible, using a lot of the principles that we go through here, but more in depth, obviously. The last one is if there are errors or fraud on your credit report, then this is the service that's there to help people who don't want to lose their hair dealing with Equifax and TransUnion. So now you know who I am, what my vision is, and even my sales pitch. Now we can get into the fun part, which is Credit Ball. Now, Credit Ball is a game that I designed to help Canadians understand exactly how credit worked. I haven't figured out a way how to play Credit Ball through the webinar, so you'll just have to watch a short clip of a presentation that I did live.
I need 2 volunteers. So, Vern, thanks for coming. Chance? Awesome, thank you. So, Vern, I know you're really good at basketball, so we're going to kind of do it on an angle here. Okay, but sure. There you go. So this, before you go, sure. This is Credit Ball, okay? So it's a game that I invented, and I invented it to help people understand credit, how it works, and instead of being just up here talking to you, saying bad jokes, I thought we would play a little game, and that would help everyone. So I'm just going to hold this because I know you're a power horse. And so when you're ready. All right. Vern! And it is Chance, right? Yeah. Okay, perfect. So I won't hold it this time. Chance. Thank you. So Vern, I'll pick on you first. Why did you stand behind the green line? So he blames his nationality as a Canadian for the reason why he stood behind the green line. Not blame, that's just what came to mind. Chance? Because I put it there. So you guys are blaming me a lot. I know it's my game, but you're blaming me. So we have Vern comes up behind the line, and I've done this over 50 times, and not one person has ever come up and said, what do I do? Okay, so everyone comes up and they assume that they stand behind the green line. I'm assuming that when you guys came up, you thought you were here to score some points. You didn't ask what the rules were. You didn't ask how to score points. You just started playing. So now you know that it's not my fault. I invited you guys to play. You guys assumed, you made up your own rules as you went along, and you played. So that's my problem with how Canadians, North Americans deal with credit nowadays. How many of you ever sat down with your parents or banker, whoever it was, and had a credit talk? No? So everyone's playing Credit Ball. However, no one's ever sat down and asked how the rules are. And why would you? Because no one has ever told you. No one's ever explained it. They don't do that in school. There's very little financial education out there. And most of the time, we're so busy in our lives that we don't even take the time to sit down and check out what are the rules. That's where the 9 rules of credit come in.
So what did you think of Credit Ball? Yeah, the comments I'm getting are the exact same as what you saw in the presentation and what I hear over and over again. That is exactly how credit works in real life. We sign up for the game, no one seems to know the rules, and that's why we're here. So with no further ado, let's jump right into the rules so that you can play the credit game to win. So the first rule shouldn't be a shocker for anyone. Hopefully no one falls off their chair or anything like that. I don't think I'm insured for that. The first rule of credit is pay your bills on time. When it comes to paying your bills on time, you have to understand that if your bill is due on the 17th and you make your payment on the 17th, it takes a few days in order for that money to get from one account to the other. So you really need to be paying your bills 2 to 3 business days ahead of time. Now I see one question here about automatic withdrawals from your accounts. So like mortgage or loans or something like that. Those are okay because it's already predetermined and it's set up that way. But if you're making a payment from your bank account to, let's say, a third-party credit card, that takes time. So when I say pay your bills on time, this rule really is just to bring to attention that you really should be paying them early and not waiting till the last minute. So when it comes to rule number 2, we talk about high balances. And if I were to say, what is a high balance? Most people I see here follow kind of what I generally get. So there's 5,000, 10,000, 20,000, all sorts of different numbers. As I see a couple people get what this rule's about, it's all about percentages. This rule is high balances equal low score. And how that works with Equifax and TransUnion is that the balance isn't necessarily the most important part. It's the balance versus the actual limit of your credit account. So if you have a $1,000 credit card, that's the limit, and you have a balance over $500, then technically, based on Equifax and TransUnion, you have a high balance. And what's happening is your credit score is taking a hit because of that. I see some comments here about, I thought it was 75%, I heard it was 30%. The reason why I stick with the 50% or lower rule is because after reviewing thousands of credit reports, I've never seen an account marked as high risk or the score really take a hit when that balance stays below that 50% marker. The other thing that it helps with, if I were to give you a test or quiz you on your mathematics skills, if you took 30% of a limit of $7,500, what would the max you would want to spend on a credit card be? So some of you have actually got it, which is impressive, but there's a lot of delay in thinking, and I can just smell the burning of the thought process here. The answer is I don't care. Well, that's my answer anyways. The reason why I say that is because life's too busy. You're not going to be at the store and think, have I reached my 30%? But when you look at halfway, half of 7,500 is a lot easier to figure out than 30% or 20% or 8% or whatever you have heard in the past. So I see some comments coming in. I pay mine off in full every month. That is great. The downside is you could still be hurting your credit. And because this rule is so important to your credit, I'll take a few minutes just to narrow in on this rule and why you never should go over 50% of whatever your limit is. Equifax and TransUnion are just a reporting company. They only report the information that's given to them. Your bank or lender, credit card, loan, whatever it is, they submit information to Equifax and TransUnion every 30 to 90 days. Now, this just doesn't happen at the end of the month, beginning of the month, when your statement's due. It can be random. If you are racking up your credit or going over that 50% mark and they take a snapshot of that and send it off to Equifax and TransUnion, Equifax and TransUnion won't see that you've paid that off the next day. And if you consistently do that month after month, they'll probably keep on capturing it at the worst time. So your credit score can be very low because you're breaking this rule, even though in your mind you're doing the right thing. So aren't you having fun yet? I hope you're getting a lot out of the presentation. There's lots more to come. There's some more comments, but I just got to keep on going here. And some of them I will be covering in the next one. There's a lot of hype and talk about high credit score, but one of the things that's commonly missed is what the banks and lenders actually require in order for you to get approved. It's not just the credit score. A high credit score is great, but it has to be backed up by having established credit. And the banks are very picky about this. And they have the secret formula that's very important to them that they want to see on your credit in order for you to get approved. And if you don't have it, even if you had an 850 credit score, you're still getting declined. So the typical criteria that they're looking for on this rule is to have 2 credit accounts established for at least 2 years with limits of $2,500 or more. So I see the comments flooding in. I'll clarify that first before I take some of them. When I say credit accounts, I'm talking about a credit card, line of credit, or loan. And when I'm saying 2 years, it's at least 2 years. So the longer you have it open, the better. Limits of $2,500 or more, that's what they're ideal. So I see one of the comments, what if my limit's much higher? There's a couple things you have to look at. To Equifax and TransUnion, the higher the limit is, the better. Because as we just discussed in the rule before, then technically the percentage that you use should be lower. Now when it comes to getting approved through banks and lenders, they have kind of a different criteria or an additional criteria where they get into GDS, TDS, and total debt ratios, and I'm not going to confuse you, but you don't want to have those limits too high because of the fact that it might discount you from getting approved for what you really want to do. But having said that, with limits, they take what your current limit is. And so you can play around with that limit. You can always lower it and then increase it after. Playing around with the limits doesn't hurt your credit as long as your balance is always under that 50%, or keep that balance as low as possible. For Equifax and TransUnion, sky's the limit. The higher the better. But for real life banks and lenders, you want to be careful and talk with the bank, talk with your broker, whoever you're dealing with, and make sure that getting that increase of the limit won't mess you up for future financing for mortgage, car, whatever you're looking for. So there's a couple more questions, but I'm actually going to cover a lot of these in this one. So if I were to ask you, what is the most important bill payment to make? What would you say? So I see mortgage, credit card, car, can't live without my car. Totally understand. The government, yeah, you must be self-employed. My ex-wife, okay, also very important. So these are all good responses. What I want to get out of this section of the presentation is for you to understand that there's really 3 types of categories where different bill payments will fall into. The first category is accounts that won't even show up on your credit. 2 are accounts that show up but don't build your credit. And then 3 are accounts that you want to focus on when building a good credit history. So the first one, accounts that don't even show up on your credit report. Many of you would be happy to know that CRA, so your taxes doesn't show up, utilities, prepaid credit cards, debit, Visa, MasterCard, banking information, most of the time, depending on the version, doesn't show up, utilities. All of those don't report with Equifax and TransUnion. The second category are accounts that show up but don't build your credit score. So those would be, much to the surprise of many Canadians, mortgage, cell phone, and also student loans. If you just had one of those accounts, you would have a 0 or what we call a reject beacon, which means you wouldn't have a credit score. So they'll be able to see that you're making payments or not making payments, and they track it all, but it doesn't go to your overall credit score. So if you just have that, you're going to be in trouble when it comes to having good credit. The third category is accounts that you want to focus on, which are credit cards, lines of credit, and loans. And most loans, except for student loans, will show up and build your credit. Now, having said all that, I am very quick to mention or to tell you that my message is not for you to not pay certain accounts, because eventually if you don't pay your mortgage or your cell phone or any of the different utilities or CRA, they will come and find you. And generally it comes in the form of a collection, which hurts, a judgment, which hurts even more, and then the worst is a foreclosure when you don't pay your mortgage. So yes, you do want to focus on making sure that the credit cards, lines of credit, and loans, that you use those to build your credit because they're the only ones that will. However, still make the other payments because it will hurt you if you don't. And that is why when I say rule number 4, I'm talking about some types of credit are much better than others. So it looks like I'm running out of time. Again, there's just so much to cover with credit, so much that I want to pass on to you guys, but I also want to respect the time commitments that you guys have and that I have. So we're going to keep on going. You guys have great questions. Can't answer them all, but do remember you can contact me after as well, and I'll try and answer them as best as I can. The next rule, very important, just to have good credit isn't enough. You have to be actively using it, because what you don't use, you lose. Just like exercising, just like, eating healthy, any of that physical stuff that your mind automatically thinks of when keeping active, you also have to do that with credit. So what that means is you want to use your credit accounts at least once every 6 months. If you can do that, then you'll keep them active, good to go, and your credit will improve. Now there's a couple of comments here. I'm going to cover some of them on the next one, so we'll just keep on going. I include this slide because it's funny because it's true, and it also introduces our next topic, which I tend to get going on and may start in a rant, but I will try and keep focused. Rule number 6, be careful with joint credit. Now, the reason why joint credit is so important is because so many people get into trouble with this, and it's not because they have intention to do bad thing, or it might not even be their fault. But if I were to tell you that your current relationship, spouse, partner, whatever it is, what's the chances of it ending? So I love doing this example because I get two opposite ends of the spectrum and everything in between. So I get the hopeless romantic, might be sitting beside their spouse right now, saying 0%. And then I get the other person who may have been through a divorce, separation, any of that, and saying 100% or anything in between, 50, 30, all sorts of different stuff. So let's just take the average or the middle and say there's a 50% chance that your relationship could end. I hope with a 50-50 chance that you guys can look at that and say, there might be some risk here with attaching my name with someone else when it comes to credit. But the real truth of the matter is it's not just divorce and separation you have to worry about, it's the other D word, death. And I know it's not a fun topic to talk about, but when talking about credit, it's very important that you understand that joint credit can be dangerous because of it's not a 50-50 chance, it's actually a 100% chance that relationship is going to end at some point. You guys are hilarious. There's a comment about death and joint credit or spouse partner that I'm not going to get into, but that's not what I'm talking about. What I'm talking about is joint credit applications. When you put your name on any account or credit account, you are agreeing to be 100% responsible for both the balance and maintaining the monthly minimum payments. So if that partner goes into a bankruptcy or a proposal, some kind of debt program, if they die, if there's separation, if there's legal problems, if there's fraud, any of that stuff is you are then becoming 100% responsible for the bank, lender, whoever it is, coming after you for the full amount. That is very, very dangerous, and it has destroyed so many people when talking about their credit. And you can easily see it when you're reviewing their credit because all their other accounts are good, but then there's 2 accounts or 1 account, or there's some judgment or something that's on their credit because of this joint credit that they had that has now absolutely destroyed their chances of rebuilding their credit or improving their credit until they get that balance down to 0, pay it off. And unfortunately, it sometimes forces the spouse or partner to also declare bankruptcy or proposal or some kind of debt program because of the fact that now they're stuck with this huge bill that's not theirs and they can't afford it. I won't get into this anymore. I will restrain. And there's some other comments, but just keep in mind that when you sign any credit application, you have to be okay with being 100% responsible, and that is very, very risky. So it is much better if you can to keep it as an individual account. And yes, to answer someone's question, this is the exact same as co-signing any of that kind of stuff. Your name's on it, you're 100% responsible. So this rule is becoming more well known, which is great. The rule is applying for credit lowers your score. And that's important to know the difference between a credit check. So there's 2 types of credit checks. There's a hard hit, what we call, and a soft hit. Hard hit lowers your credit score. It's done by banks, lenders when you're applying for credit. Soft credit hits are generally done for those. Maybe you're applying for rent or utilities, or you're checking your credit yourself. Those don't lower your score, and no one else can see them other than you as the consumer. So the next comment, and I see them coming already. How much does it lower your score? How much does a hard hit lower your score? That all depends on what's on your credit going on and how many times it's been done and who's been doing it, but generally speaking, it's about 5 to 10 points. So not tons, but something or an amount that does lower your score. The other question or call that I always get all the time is a bank or lender has pulled it multiple times, or I didn't give them permission. The only way that you can be 100% sure that they're not checking your credit is by not giving the institution any of your personal information. Name, birth date, address. Not even the SIN number. They don't even need that anymore to pull your credit report. They are supposed to get your permission, but what does happen, what should happen, can be two different things, unfortunately. Just remember that when you sit down with the bank or lender for the first time, that documentation that you're signing probably includes a clause that will allow them to pull the credit report or your credit report as many times as they want, whenever they want. So I don't agree with that, but that's just how it goes. If what we've gone over today doesn't make you upset because no one's ever told you this before, then this rule should do it for me. The reason why it bugs so many people is because they've been told by their bank to do it, or they thought or assumed that by closing off an account they're protecting themselves from fraud. They just don't use it anymore. So that was the responsible thing to do, was just to call in, close it, pay it off. What I want to get across to you is that your credit score is driven mostly by current information. The moment you make your last payment, close an account, upgrade an account, refinance an account, any of those things, what will happen is that account will be closed and you have now lost, or all of that good payment history, all that history is now being put under the category of old credit, which doesn't drive up your score nearly as well as current credit. Yes, you do want to pay your bills on time. Upgrading your account might be the best thing, or refinancing. I don't have time to advise you on what's the best on each one of these things, but what you do need to know is that if you close an account, upgrade, any of those things, change the account in any way, what you could be doing is destroying your credit. If you are going to close an account, make sure you don't do it right before some other big major financing. For an example, don't go pay off your car loan right before you go for mortgage financing. You would want to take that car loan, and the broker or the bank can instruct that to be paid, or you can prove that it's been paid off after you've already applied and they've already pulled your credit, because that will lower that credit score. It is also important to understand the effect it has on your credit really depends on how long you've had that account open. The longer you've had it open, when it's closed or paid off or upgraded or financed, then that will lower your score even more. Or your score is more based on that established account. Now, we talked about having multiple credit accounts. One of the other major reasons that you want to have more than just one credit account, because if you have multiple accounts and you close one of them, well, then what that does is it takes that kind of out of the consideration of your credit score, and everything that is left behind is what's left holding up that credit score. The more other established accounts, the less it will lower your score. I see a bunch of questions here. Definitely have hit the sore spot with a few of you. I don't have time to answer all of them. One of the questions about how does that work with upgrading credit cards. So you've got that call. The bank said, congratulations, you've now been approved for the special points, discount, whatever it is. But what you have to understand is that if you upgrade that credit card, what you're doing is closing the other one down and starting that new account will be brand new. That's fine, but just realize that your credit's going to take a huge hit by doing that. So you don't want to upgrade before any major financing, and you want to make sure that it's not one of the two most established credit cards that you have, because if you do that, then you're really going to damage your credit. So what you can do is say, that's great, thank you, can I get that new card but keep my old card so that I'm not destroying my credit? And the downside is that bankers, these people that are calling you, they really don't understand the negative effect that this will do to your credit, which is why they're probably not warning you about it. That's something where you, knowing the rules of the game, can now make that best decision for you and what's going on in your life. So as much as I'd love to keep on talking about closing your accounts, because it's definitely a big one. So hopefully that meme gave you a little bit of a laugh, but it introduces the biggest message I want to get across to you, which is Rule number 9, don't let someone else wreck your credit. Identity theft fraud is the #1 growing crime across Canada. The amount of errors and fraud that are on credit reports are huge. And it kind of bugs me when I go and talk to people. They find out what I do and they say, oh, I have great credit. And I say, that's great. When was the last time you even checked your credit? It's been a couple of years. The last time I got a mortgage or a car or something like that. But it's okay because I got approved, so I must have good credit. Just because a bank approved you, or if you think about how long ago that was, doesn't mean you have good credit now. The only way that you can know that you have good credit is by checking both Equifax and TransUnion. And a lot of people will favor one over the other or just check one. But it's ideal that you check your credit reports at least once a year, but you got to do both of them to understand your full credit picture. There could be errors on one and not the other. There can be mistakes on one, not the other. Some banks use Equifax, some banks use TransUnion, and some banks use both. What you want to do is make sure that both credit reports are accurate. So to answer some of the questions, the free credit reports that I'll be sending out to you so that you can get them for free once a year, they do not include the credit score. However, the credit score is not as important as knowing what's on your credit report. And now that you know the rules of the game, you can play the game properly and the score will take care of itself. Now you can go purchase them online as well, but that costs money and you have to have a credit card in your name. So sometimes these forms are the only way to even check your credit. Now because you guys have stayed to the end and I promised you some free stuff and some discounts, here's the credit report, the webinar. That you can sign up, the link there, and you can go through that for free. And for the other two programs, there's discount $79 and then $100 basically discounts off of the one-on-one programs, and those have a couple week time limit on it. So if you are interested, the information will be sent out to you. If you're looking to sign up, then you would just want to do that within the next couple weeks to get the discount. So that's the basic presentation of the 9 rules of credit. I apologize we went through it so fast. There's lots of ways that you guys can get additional information, answer any questions that you have. I have the Facebook page, which will be sent to you, the link that you can go on there, check it out, read. Definitely share this information with as many people as you can. If you have families, stuff like that, you can send them the link to the free credit reports. All that stuff helps get the word out and helps Canadians understand exactly what's going on with the credit. So there's a couple questions about the program, the Ultimate Credit Fix. What if you only have one issue or error on the credit report? It's the same price. They're flat fee programs designed so that people can easily recommend them, understand exactly what they're getting. How quickly can I increase my credit score? I've seen jumps of 150 plus in 30 days. Generally takes a minimum of 30 days to get the credit score to jump up. But how much it will jump up, I really don't know until I've reviewed the credit reports with you. Then I can let you know exactly how high that's going to be. But once again, everything's designed not only for the credit score, but establishing it properly for approval for best rates, best terms with the major banks. So there's a question here about, can I just call someone to get more information? So yes, if you have questions and you want to talk to someone one-on-one to figure out exactly if it's the best for you or what's included in the programs, then call the number that will be sent out to you. It's toll-free, direct, and what we'll do is go through that with you, find out what's the best fit, then go from there. If it's a quick question that you have, definitely call in, send me an email, whatever the case may be. I will answer those questions as quickly as possible. So that's pretty much all I have time for today. I hope you guys got a lot out of it. I really appreciate you guys showing up today and taking advantage of that. Once again, please pass it on. Please check your credit reports. Please check and ask questions on Facebook, whatever the case may be, and I will definitely answer those as quickly as I can, or at least point you in the right direction. And I hope you guys have an awesome rest of the week.